The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 9th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs. My favorite, because I believe this encapsulates everything. And what I call become your own electrician. That's right, the electrician of your beliefs. And the reason is because beliefs have the power to create and the power to destroy. You and I, we've got the amazing, incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that empowers us, one that can literally save our lives and take us to places we never even dreamed of. And then there's those few out there, unfortunately more than a few, that actually use these things to disempower themselves. Think about it like this. When you really take a moment to think about it, there's only one thing that you can control in your life, and that's the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls, we've got bears, one that sees an event as a selling opportunity, one a buying opportunity. Your beliefs, the meaning that you give to events, to statements, criticisms, whatever it might be, you are the one in control of that meaning. And that's pretty cool when you really think about it, because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs, they all begin with a change in beliefs. And no matter what level we're at, we are all looking for breakthroughs. If you are doing fantastic, you're looking to do even more than fantastic out there. What I found is the most effective way to change is to get our brain, is to link our brain to massive pain in an old disempowering belief. We've got to believe at our deepest level that that disempowering belief has cost us in our past, will continue to cost us in the present, and ultimately only bring us pain in the future. That is no way to live, and that is what's called the Charles Dickens process. Now, knowing what we don't want is just as important as knowing what we do want. And the reason is this. We need to replace that which we want to remove from our lives, and that would be a disempowering belief, and we want to replace it with tremendous pleasure, the tremendous pleasure of adopting a new empowering belief that's going to take us to wherever it is that we dream. And here's the thing. We've got to know that in any moment, the decision that we make can and will change the course of our life forever. It could be the next person we stand behind in line, the next person we sit next to on an airplane, the next phone call you make, the next phone call you take, the next movie you see, book you read, workshop you attend, newsletter you subscribe to. Any of these things could be the one single thing that causes the floodgates to open. And then all of the things that you and I have been waiting for, they'll fall into place. That, folks, that was the epiphany I had when I developed the Rhodes Momentum Indicator System, the market analyzer, the trading strategy out there, and I know it's within you as well. Here's the key. Always take massive determined action. That's all that it takes. Let's go check out the massive determined action inside the markets out here. Right now, Dow is trading up 21 points, trading out at 16,277. S&P is up a point, trading at 1853. NASDAQ up 10 points, trading at 4123. Russell 2000 up less than a buck right now, trading at 1145. Let's see here. New York Stock Exchange up 4 points. Not a ton of market breadth out here. Only 196 net advancing issues. What the New York Stock Exchange would need today in order for the bulls to take control would be 1,086 or more out there. We've got gold trading back $5 right now, trading out at 13.04. Silver back 27 cents. It's off of its session lows thus far. It's trading out at 19.78. Light sweet crude trading out at 102.65. You know, we took a look at a potential trade. I did say potential trade inside of light sweet crude yesterday. We'll go check in on light sweet crude here in a little bit. and see if it's bumping into resistance or if it's up above resistance, wherever it is at. Right now, over in, it's interesting, over here in Europe, the FTSE was up about 1%. It's given back quite a bit of its gains out here. It is now only up 38 points. The DAX here has just turned slightly negative, down 47 cents. Our call number is 877-927-6648. Let's start off by taking a look at the S&P chart here. It's traded at 1853. It's got some significant resistance up here at about the 1861 level. The key candle session I'm watching, not just the 1863 here, but is this going to be, when we take a look at the S&P 500, it really has had not much damage at all whatsoever. Let me put this crosshair up here. It's going to make it easier for me to look at this stuff. There we go. If we take a look at the high was put in here last Friday. So the high was put in on last Friday. The high out there was at 1897.28. We had volume up at those highs, just as we did inside the Dow out here, as it was making a high inside of the S&P 500. It has moved into, if you watch us on Tiger TV, the yellowish zone. That's the cautionary zone inside the Rhodes Momentum Indicator. But we can see this little consolidation. You can come back here and say easily consolidating since February of 2014 out here with the lows right now. The lows here that have been tested yesterday, the low that was tested was the swing point from March 14th. That low out there was 1839.57. Thus far, it has been rejected. If you get it close below, I did a special analysis for my clients this morning. If you've never had a chance to check out Mastering Probability, today would be a good day to do it, because it really lays out what the strategy is. Now, we are short in the newsletter. We've just simply adjusted our stops here for the market, and it really lays out that if the S&P, if the ES Mini, the SPY, they get below a certain level, what we ought to see is just a huge flush down the toilet out here, a huge move lower. Now, at this stage, we haven't seen that here, and we've seen here where a market has been consolidating, as well as the euro yen has been consolidating, so it's important to be watching the lows out here. We'll take a look at the SPYs here in a moment, but right now the S&P 500 has really moved into more than just the cautionary zone. We've had this little crossover of moving averages out here, and that's what is telling me the 1864-ish range is important. If you get it close above this candle that formed on April 7th, the high being 1864.04, then that says what you're likely to do is see a market that's going to, at least the S&P, that's going to go test those highs from April the 4th out there, last Friday. So that's what's going on inside the S&P 500. So far, damage has been contained pretty well, but definitely some selling pressure that is in place, even though it has not retraced that much thus far. Let's go take a look at the Dow Jones Industrials. Right now, it's trading out at 16,276.92. We're also going to see that this has been strong. Now, the Dow here today is just entering potential crossover out here. The Dow, in order to get bullish, now we've got volume at the highs. Big bearish engulfing. That says that session from last Friday is your resistance level, but there was volume. It was pushing highs with volume out there. And that says that we could see a test of that area. If the market does not crack to the downside, the expectation would be that at least the bottom of the candle session from April 4th would be tested, and that low is at 16,392.77. In order to really, and what's interesting here, in order to really get bullish, you would need to see a close back above 16,421.38. That would actually set up a potential buying opportunity. But the cool thing is, because of the volume that we had there, a test on lighter volume, well, that and a rejection of the low of that swing point, that might be all that's needed in order for the market to then continue with its resume to the downside. But as we speak here, as we take a look at the Dow, as we take a look at this little green signal, the last form here on March 14th, you got the buying opportunity, which ended up leading the higher price. That buying opportunity coming in on March 17th, March 18th out here. You can see basically these candles here. These candles help us to identify the buyers and the sellers and who is in control. Now, these green candle sessions tell us that the sellers were able to push the market down to a normal level, and that's why you wait for a confirming pattern for price to get above those areas. The U here, what it really represents is uptrend. So the uptrend is actually still in place as we speak right now inside of the Dow, albeit on the end. And that's on the daily chart. Yeah, there's some resistance. You had an actual doji candle back on April 3rd. You had follow through with bearish engulfing on Friday out there. But nonetheless, we have volume at the highs. You'll see that when we switch over and take a look at the ETF structure. If I just switch now here to the weekly chart for the Dow, just to put things in perspective, there's really nothing bearish about the Dow. All it's done is come down and tested a little support area so far this week, right around the 16,211 area. So the weekly trend out here is still long and strong. Let's switch back to the daily time frames. Let's take a look at some of the other indexes. So let's go take a look at the NDX 100, because that certainly has been the leader on the way down here. We want to be paying attention to this. The NDX 100 looks like what it wants to do. So today, if it closes above the candle session from April the 7th, that would be a high of 35.51. It likely sets up a run to about the 35.89 level. That becomes, and if you get a close above that, that could change the complexion here of the market. We'll have to just take things one moment at a time. But it looks like that would be the area where it would want to run to. That would be on the NDX 100 out there. Let's take a look at the SOX index. Let's take a look at the semiconductor index out here. This, too, being a strong area of the market. See, we're trying to identify any weakness that might be out here. And the SOX index here, you can see if I pull this back, this is the first time we've seen one of these, what I like to refer to as a lower threshold candle. This is ideally on an uptrend. What the SOX could be doing today with a close above 582.59. A close of a 582.59 would actually be a buying opportunity inside of the semiconductor index. We'll take a look at the SOXL during the show today, and if I don't, remind me about it, and I'll make sure that we do that. But this market will not crater and crash without the semiconductors, without the financials moving to the downside out here. And right now on the daily chart of the SOX index, it still remains bullish out here. If we take a look at the Russell 2000, let's go see what it looks like on a daily chart out here. Russell 2000, it's trading out right now at 1146.80. What does it need to do to get to short-term bullish out here? We need to get above the 1150.50 area. Unfortunately, it's going to have some pretty stiff resistance at about 1163. So the Russell 2000, not much of a bounce yesterday, really a sideways day. Didn't provide us with much in the way of information. Today, really the same as well, at least as we speak right now at 10:18 a.m. on wonderful Wednesday morning. Let's take a look at the XAU. Let's take a look and see what this is doing here this morning. This has been struggling. Did run and close above a resistance level here yesterday, which is right around where it's trading right now, right around 94.25. It's traded at 94.23 as we speak right now. I still don't see anything truly bullish about the XAU as we speak. The XAU is going to track gold. Gold, is back $5 right now. Silver down 28 cents. It just seems and looks as if gold and silver and the XAU and the mining equities want to move lower out here, at least in the short run. Right now, we've got the Dow. It's up 40 points. S&P is up 3. Composite is up 20. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 55 points. S&P is up 5 right now. NASDAQ Composite, that's up 27 points. We're going to go check in on the NQ, the 120-minute time frame out here. Yesterday, we were pointing out as the market was moving lower, we were pointing out the price relative strength divergent pattern that had was forming out here. That was one that took place at 4 o'clock in the afternoon. That was a couple of trading sessions ago. Those are important areas to be paying attention to, especially if you trade the futures contracts out here. Because when price is moving lower on less relative weakness, which is what you had taking place, that usually gives you a real good indication. Once you've got confirmation out here, confirmation with candle signals, once you've got confirmation, it tells you that you're going to go ahead and make a bounce. Now, the bounce out here that we've seen take place thus far is the dead cat bounce, the 0.382 retracement level. the 38%, and that is at the 35.49 range, or at 35.54 as we speak right now. Now, this session here does not end till 12 noon, so we're early into it. But what we can also see here, if you're watching us on Tiger TV, you can see these little red shaded boxes out here. And these red shaded boxes, they're what tell us who is in control of the market. You see, the market works like an EKG. If you've ever had an EKG, it flows, from the top to the bottom, kind of like a consolidation market out here. And I've built a tool that basically is the EKG of the market. And this helps us to identify, is it really, and I've converted that EKG into who's in control here, the buyers or the sellers. And the green boxes, well, they represent the sellers. I know I probably should reverse this, and just too lazy to go change it. I've gotten too used to it here. The red indicating that buyers are in control. And that's what we've really seen take place ever since the low, or ever since 8 o'clock in the morning here yesterday. So you see 3 red boxes. The buyers are in control. At this stage here, I would have to say odds favor moving up to about the 35.95 level. That would be about another 40 points higher. That would be the 0.618 area. At least that's what the NASDAQ NQ is projecting to us as we speak at the moment. However, NASDAQ is doing all the work trying to lift the tide here. And what I mean by that is if we go take a look at the Dow futures here, the Dow futures have not been able to make the dead cat bounce. Yes, they have that same bottoming pattern, short-term bottoming pattern, okay? So I'm not talking about a necessarily long-term bottom. It's a 120-minute chart, for goodness sakes, that we are looking at out here. And it gave us a nice confirming signal at 12 noon yesterday. Nice big bullish engulfing candle. And the follow-through, it was fine. It was okay, meaning the 2 o'clock session yesterday. But it, which is the stronger of the 4 indexes out here, it's acting weak. And so that has got to make us say, that's got to say, caution, Will Robinson. What is it? Is it now the Dow's turn to fall apart? Are we just simply where the NASDAQ has gotten all the damage? Is it now the Dow? Is it now the S&P? Look, those would be 2 targeted areas because those 2 have been strong out here. The Dow at least needs to get up to 16,286. You're at 16,231. I'm referring to the Dow futures out here. So the strength is giving us a little bit of a diverging signal out here as we take a look at what it is doing. Let's also go take a look at the S&P futures. Let's see what the S&P is doing. If it's been able to make its dead cat bounce, its 0.382 level, and it too has not. So now, what does that mean? At this stage here, I see the buyers are still in control. You ought to see the ES Mini get up to the 1854 type range. If it can clear that with any kind of gusto, any kind of wide-ranging bar or what have you, then that brings into play the 1869-ish area. That would be your 0.618 retracement. So that's what's going on inside the intraday charts. Now let's go check out the ETF structures here. Let's see what we've got going on inside of them. I mentioned here, I believe it was during this show, where yesterday what's interesting about the SPYs is it's actually giving us a signal that it is not ready to break down. Why do I say that? Well, I say it for a couple of reasons. Number one, we've got a swing point low. That was Vladimir Putin swing point day. That was March the 3rd out here. We saw the SPY trade down with 167 million shares. The low of that was 183.75. That level was actually tested yesterday with 112 million shares. 112 versus 167. That is not the way you bust out the lows. That is not the way you bust out a consolidation pattern, which is very clear that we are taking a look at here. At least, that this consolidation pattern takes us back probably to February 21st when it began out here. Now, what have we seen take place here thus far? 21 million shares to the upside. It's going against 140 million shares to the downside from April the 7th. We're 1 hour into it. The volume would have to keep up at this pace, and I don't expect that that's what it will do. We get back, we'll come back, we'll finish off the SPYs, we'll take a look at the diamonds, we'll look at the Qs and the IWM, or anything else you'd like. Just give me a call at 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 53. S&P is up 6 right now. Composite up 27 points. Had a request to go take a look at SanDisk, so we'll do that. Then we'll go back to the ETF structures out here. I believe the question was somebody is looking to take this to the short side. If we take a look at the weekly chart here for SanDisk, a nice, strong-looking chart out here. You can see the little rising price channel that it has been in. Now it's above the top of the rising price channel. It can't be breaking out. It was already going north out here. Did form a little shooting star candle. That's a bearish reversal signal out here. That was on April the 4th, the weekend at April 4th out there. You're getting some follow-through on that signal today. If you're looking for where could price pull back to, you would have to say that price could pull back to the bottom of this rising price channel. Where's price located around there? Probably in the $69 range or so. If we take a look at the daily chart out here, the daily chart here shows a nice sideways consolidation, a 21-point consolidation range. Broke out of it, came back and tested it. This was back in July of 2013. Broke again, had a sign of strength, came back to test that sign of strength as well as a consolidation box. And consolidations, when they break, they will make a measured move equal to or greater than the consolidation. We can see here in the case of SanDisk, it made a move greater than the consolidation level. Now, what we have seen here, as it was making the high, it did it with 6.3 million shares. That was on April the 4th. Then it came off of that with 6 million shares here. So, you're starting to see a little bit of volume. Where can this find some support out here? You'd have to say right around the high of January 8th, right around 73.92. It's at 78.32 right now. There you had some pretty decent volume, 9.6 million shares. So it's not as if this thing has really broken a swing point, so to speak, on the way down. You'd like to see it do that, and right now the swing point you'd have to take a look at would be yesterday's, and that low of 76.85, about 5 million shares there. You'd like to see that area get taken out with volume. So I hope that helps, and I apologize I didn't write it down. I just was multitasking. And I just wrote down the ticker symbol. Let's go and let's go back to the ETFs. I was talking about the SPY here before we went into that last break. And what was interesting about the SPYs is that it was not able to take out the consolidation low or the swing point low. And yesterday was a failure on both price and volume. That says that you've got resistance right around the 186 level. If we see the SPYs get above 186, we take a look at the candle session here from April the 4th. It made a higher high, and it did it with volume. Yes, price moved up intersession and then moved down. Years from now, if you were taking a look at this stock chart, you'd look up and you'd see that candle, and you'd see the volume in it, and you'd say, hey, it's a high-volume candle, there, high-volume high. So what does that mean? Well, it means that the low should at least be tested. We haven't seen that here. So the first target for this bounce that we're dealing with, and to understand where it may or may not go, the first area to be really focused on 186.10 when you take a look at the SPY. That would be a test of that high volume high bar out there. If you close inside, not you, but the SPY closes inside 186.10, that sets up a move into the 186.30-ish level where it would potentially find some resistance. If it closes above that, then it could actually go test at least the top of the consolidation box, or at least 187.37, which would be the 0.618 retracement and could be the C point of an A to B equals CD to the downside. We'll just have to take a look at what goes on volume-wise. So far today, 24 million shares. That's what's going on inside the SPY. It's not ready to crack. If we take a look at the diamonds out here, you're going to see a similar message. Quite frankly, where the SPYs were able to get down and test the low of the Putin low, that was the March 3rd area. Just to show you how strong the Dow is, the diamonds here rejected the top of that session with lighter volume yesterday. The top of that is 162.19. Yesterday was a test of that area with 5.9 million shares, 5.9 versus 9 million shares. Even the trading session from, Wednesday, from Monday, when the market had some additional follow-through, and it closed inside that swing point just slightly. It was only 8.6 million shares going into a Putin low, which had 9 million shares. Not enough yet to bust it out to the downside inside of the diamonds. What does that set up in the diamonds? Well, the diamonds also have that high volume high. No denying it. That is the trading session from April 4th. So where do we look first? We take a look and see what happens as the 163.58 level gets tested. If, in fact, the Dow diamonds can get up there. If it tests that, meaning it gets to 163.59, closes back below it, does it with less than 10 million shares, then you'd at least have a test of a swing point high that had volume out there. And then if it begins to trade lower, that is where you would have your C point of an A to B equals CD to the downside, or a potential C point is how we really should be looking at it right now. A bounce above 163.27 and a close inside of the Friday swing point high, a close above 163.58, says 164.34 to 165.09 would likely be in its future. If we take a look at the Qs out here, we know the Qs have been the weak link. What is the weak link done here? Well, the trading session is February 5th. That had 41 million shares. The test of that was with 81 million shares. So that's coming into the swing point, coming in there with volume. The Qs here, are suggesting that they are going to get back down and at least test that swing one more time. What we've seen here thus far, what was yesterday, an absolute inside day and a light volume bounce out there, 51 million shares. Today so far, it's above the .382 retracement. It ought to find resistance right around 87.87, maybe 87.50 or so out here. Volume today, 14 million shares, which is not too bad. It looks like it's better than yesterday. But we'll see how it ends the trading session yesterday. Again, 51 million shares out there. Let's take a look at the IWM. Let's round this off. Let's take a look at the IWM, the Russell 2000. Let's see what it is doing, what it has done here. Now, the Russell has made a confirmed A to B equals CD to the downside, but now it's getting a little complicated out here. The B point on this was the March 27th low, which was 113.69, had volume of 65 million shares, blew through that here 2 trading sessions ago with 68 million shares. Now, it had volume. It blew through it price-wise. Volume-wise, 3 million more shares. Nonetheless, it's a confirmed A to B equals CD to the downside. Now, 1-to-1 takes you to 111.58. This really looks to me like it more wants to do 109.69, and that would be your 1-to-1.272, A to B equals CD. If it can close inside this, so volume today here, 10 million shares. Yesterday was 60 million shares. Downdraft was 68, going into a downdraft with 86 million shares. If the NASDAQ can pull all these boats higher, can pull the tide higher, you could see the Russell 2000 maybe get to 114.86, maybe 115.52 or so. But the Russell 2000 right now, a little bit weak in the knees. Let's go check out some of the sectors within inside the S&P 500. So we ought to do that. We have not done that. Let's take a look at healthcare. It's first one up on my screen here. So the XLV, let's go see what it is doing. Let's clean this up just a tad. Out here, it made the 1-to-1 A to B equals CD. Let me refresh the screen. I don't know if I've got full live. Let me see here. Yeah, there we go. All right, so this here had completed a 1 to 1.618 A to B equals CD to the downside. So this thing here has formed a Gartley buy pattern. Let me see, yeah. And so it has, which is a 0.618 retracement, a 1 to 1.618, A to B equals CD down pattern here. And let's see what it is doing today. So the bounce today, 2.9 million shares. Yesterday made a low with 15 million shares. So the volume today is not too shabby inside of the XLV. Now, the XLV is the third weighting structure inside of the S&P 500. Remember, we were looking at the SPYs and saying, hey, not much damage there, but the XLV is showing a little bit more damage than the actual overall SPY is out here. And you've got a Gartley sell. Let's go draw that in. And I'll get rid of all the lines out here. So here is your Gartley buy pattern that had formed out here. I said doing that because it wants to use something else as a C point. Let me draw in a prettier Gartley pattern out here. I know why it was doing that. There we go. There we go. Right about here. There's our 0.618 Gartley buy pattern. Now, let me go ahead and erase this stuff off. Let's erase the Fibonacci numbers because we're going to put new ones on here. So at this stage today, if you were to see it close above yesterday's open, 57.48, you'd have a bullish reversal signal inside of the XLV after a Gartley buy pattern. Now, we know that if it fails, it'll go down to the 0.786 level, but we want to take a look at where the bounces could take us to. So 58.10 is in the cards for the XLV. That's nothing more than a dead cat bounce. And 59.01, the 0.618 retracement area, is also a potential. So we want to watch the XLV today. Now, one of the sectors, third weighted structure inside the S&P 500, because if it closes above 57.48 out there, you'd have a bullish reversal signal. Let's take a look at some of the other sectors. Let's look at the energy sector, and then let's look at the technology and the financial sector. So the energy sector here, the XLE, this is flirting here with the bottom of the rising price channel that takes us all the way back into the time frame here of June of 2012. So it broke back inside there. Yesterday's action, hold on a minute. Let me refresh this chart. I think for some reason these charts haven't updated. There we go. Okay, now it's updated. So let's take a look at what the XLE actually has done here. So it got down to the bottom of that rising price channel. Did it on April the 7th, and yesterday was a bounce off that. Now, the bounce off that was pretty good. 11.6 million shares after making a low with 11.2 million shares. So that's a pretty decent bounce. Now, today here, it's not a bearish candle, that's for sure. It has sold off from its highs out here, but looks like the XLE wants to go back and test the high. Had decent volume here yesterday. The high was made with 14 million shares, the low of which is $90 even Steven out here. Intersession high that we've seen has been 89.04. Let's see what's going on with ExxonMobil. XOM is a ticker symbol because you've got ExxonMobil, Chevron, and the Schlumberger, I think, are the top three. So ExxonMobil here consolidating at its highs. Really not too shabby here. Do you have a confirmed A to B equals C to the upside inside ExxonMobil? We'd be taking a look at the February 24th swing point high, 16 million shares. That was crossed with 12 million shares. So no, you don't have a confirmed A to B equals C to or anything like that to the upside. Let's take a look at what retracements this has had from the high to low. Let me go ahead and blow up the chart here. It'll be a little bit easier for you to follow along as you're watching this on Tiger TV out here. Let's see. So the energy sector right now, it made the 0.618 retracement, but this thing has not backed up. It has not backed up much. No real big selling here. This thing has weathered the retracement, the most recent retracement, really well. ExxonMobil. In any event, let's go take a look at, so it looks like the XLE wants to go back and test the highs out there. Let's take a look at the XLK and see what it is done out here. The XLK right now looks like it's straight out at 36.10. Again, I need to just refresh everything here, make sure we've got it. So the XLK has been working in a consolidation zone. Let's go ahead and expand that out here, just like we looked at inside the S&P 500. Of course, with it being the number one weighting structure, that would only make sense, right? So the XLK made a low here with 11 million shares. That 11 million shares was from April 7th. That was testing 8 million shares. Still couldn't bust it. Testing an area where it broke out with 7 million shares. So it's interesting. It was able to test that area with volume and still couldn't bust through there. Yesterday's move, a bounce with about 7 million shares so far today, 1.8 million shares. Not a lot of energy inside of the technology sector as we speak here right now. It has moved above the 0.382 retracement, which is 36.05. You're trading at 36.10. A close above 36.05 says 36.38 would be in its cards out there. And at 36.38, you'd almost have to say if it can't bust the consolidation, it ought to go bust it out to the downside. It will go ahead and try to move up to the top of that consolidation area, right around the 36.70-ish type range. So that's on your technology sector with inside the S&P 500. Let's look at the financials. Let's look at the XLF. Let's see what the XLF is doing here. Give me one moment, please. All right, so the XLF financial sector, it's trading out at $21.85 here. Volume so far today, it's got, so yesterday was down with 45 million shares so far today, about 9 million shares. This thing had a sign of strength, little gap up. Let's grab this here. So this thing gapped up right here in the trading session of, let's see if there was any volume behind it. That was on the trading session of March the 4th. 49 million shares to the upside. That 49, that gap, was tested with lighter volume yesterday. So this came back, the XLF came back into a gap with lighter volume yesterday, rejected that gap, that first area of support. Very interesting. If we take a look at from swing point high to swing point low yesterday is what we're taking a look at. The bounce here kind of meager. It has not been able to do a dead cat bounce, which is $22.05 out here. I would expect that to be the run that it would try to make. So that takes care of the sectors within inside of the S&P 500. Let's go take a look at some stocks out here that are popping and dropping. Looks like we're going to have to do that when we get back from this break. Right now, just kind of a quiet day. The Dow's up 32, S&P is up 3, Composites up 22, Russell 2000 up 3 points. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Kind of a meager attempt at a two-day bounce out here. The Dow's up 30, S&P is up 3. Of course, we have a lot of time left in the trading session out here, so we're only an hour and 25 minutes into it, so we'll see what takes place. Now, let's take a look at a number of different things to be paying attention to. We've talked quite a bit about the consolidation areas that have not been able to have been taken out. So, again, we've got a consolidating market, with the exception of the NASDAQ and the Russell 2000 out there. But let's take a look at, and in the Qs, we can't recall it, but in any event, let's take a look at a couple things where we get some indication as to what the market is really doing. Right now, the VIX index, it's trading right on the 50-day exponential moving average. It's trading at 1470. The number's 1463. If you see a meaningful move down below 1463 out there, the sphincter muscles of the shorts, that's including mine, will start to get pretty tight out there. Of course, I use stops in place all the time and let the market just do what it's going to do. I can only control where I place those stops and those exits out there. But a VIX index that trades below the 50-day exponential moving average means you've got liquidity, means the market can move higher. It's either going to do one of two things when the VIX is below the 50-day. It's either going to move sideways or it's going to move north. One of those two things out there. So right now, it's kind of in a neutral state. If we take a look at the daily chart here for the Euro-Japanese yen, well, that was not able to bust a consolidation pattern. So this could continue to be in a consolidation zone. It needs to break and close below the 140. What is it, the number here? This breakout session from March the 6th, 140.41. And I mean with conviction, not like by a few pips out there. With some conviction. If it can't bust out the lows, this is going to make a run for the highs out there. That would put fuel in the fire. Right now, all that we know is that it has not been able to bust out the lows. Now, the last two times down here, last three times, I should say, which was on March the 14th, you had a bullish engulfing candle the next session. You came down and tested it, or it came down and tested that level on March 21st, bullish engulfing candle. Came down and tested it here on March 27th, bullish engulfing candle next session. In order for it to have a bullish engulfing candle today, it's really got to get its legs going here. It needs to close above 141.62, and at this stage here, it's not suggesting that it wants to do it. So this time, with regard to not busting through the consolidation level, may be different out here because the other signals have clearly said on the day following the test of that area, it said, I don't think so. And right now, that is not the message that we are getting. So it says, okay, you'd have to say, okay, advantage bears out here. New York Stock Exchange. Let me pull that up here. I didn't update my chart, but, I know where we're at as far as the oscillator readings. I read them each day here. New York Stock Exchange is basically, we're talking about minimal damage. Look at this. Here's the wider swath of the market. From the low, from March the 14th to the high that was put in here last Friday, what we're looking at is, just a 0.69 retracement? Really, we're looking at a test here of nothing more than the 2007 highs, the breakout of a 6,000-point consolidation zone out here. 10,387 is the number. And what the New York Stock Exchange did yesterday got down to 10,376, closed at 10,452. It was rejection of that 2007 high out here. What you need to see, what the Bulls need to do is get more than 1,086 net advancing issues. Then they can have the ball back out there. Otherwise, you have to presume that the Bears have control of the ball. But that's what you want to be paying attention to as we go into the end of the trading session today. So, folks, stay tuned. It's Wonderful Wednesday, and Wonderful Wednesday, that's a beautiful day here at TFNN. That means we got Basil Chapman. He's up next. Then we've got Daryl Martin, David White. We've got... after Basil, we've got Larry. My apologies there, Mr. Pesavento. And then we've got the Tom O'Brien Show from 4 to 6. Have a great day, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.